Hey everybody, it is Monday, January 20th, 2019, and we're off the markets today, getting ready to trade Tuesday the 21st and face our new all-time high that we made on Friday and see if we're going to continue higher or if we're going to finally come back down and maybe correct a little bit. Anyway, along with that, I wanted to take this time off to sort of dive a little deeper into these forks that I've reintroduced to you guys, starting with the video that began last week, that started us off for last week. So if you watched that video, this is a good continuation of it. If you didn't watch that video and what I'm saying here is completely new to you and you have no idea what I'm talking about, maybe going back and watching that video will help you out, get you a little bit better understanding. But here is the S&P 500 chart backed out, showing a few years, and I went in and found these other forks in an old chart and went ahead and replotted this new one that we're in right now on here so that I can kind of show you the progress of how these forks work and how they've helped us along the way over the last couple of years. I like to use them and really bring them out when we're at an inflection point in the market, when we've headed down to a swing low or a swing high or an all-time high, because these work best when you plot them off of major highs and lows on a chart. This orange one here, this is a huge bear fork that we traded through in 2018. It started off with the initial high that was made at the beginning of the year in 2018, kind of reminiscent of where we are at right now. This high hit on Friday, the last day of Davos, and then we kind of rolled over from there and hit this horrible first low in early February, bounced back, and then back tested and held a little bit higher low against this as we started into a little further into Q2 of 2018, and from there on, this bear fork sort of gave us a rising target line that we could climb along all the way up to our high that we made at the end of 2018 going into the fall, a new all-time high, and then of course we rolled over from there, and you can see that price traveled back down to the median line, bounced off of it, and then finally in December of 2018 broke down below the median line and almost reached the very bottom of this fork, reversing and coming off. When it made this huge swing low, this 2018 low at the end of December, then we had our third point for our new bull fork, which used this backtest low, this high that was made in the fall, and finally this December low. It projected out, and you can see as we got into 2019, we broke on up through the median line, broke on out of the old bear fork, and worked our way almost to the upper half, well into the upper half of this bull fork before falling back and back testing both the forks here and coming back and falling down again until finally at the end of 2019 we broke our way out of, as its very first point, this inflection area where we came together with, where all the forks sort of meet together, and all three of them meet in one spot here at this low that we made in June at the midpoint of 2019. And here is the next point was our July all-time high at 30.28, and then our third point was the back test of all these lows that we made. We are now rising above the median line, and this is where I started off the video last week where I first introduced these forks to you. Here is that exact same chart in close-up. Last week when I introduced this, I decided to unveil it to you guys because we were really starting to make some obvious closes above this median line. We had come back and tested it a few times, and here we are now really lifting up and away from this median line. And as I showed you what happened in previous forks, we tend to work our way towards the top of the fork, working our way and living between the median line and the top of the fork. So if we are going to rise a little higher and then fall back, it naturally assumes that we're going to be looking to test this median line one more time and bounce off of it. And if we were to break down through this median line, we would maybe be on our way to testing all the way down here to the bottom of the fork. And as you can see, here is that old bull fork that we broke out of. Maybe this isn't going to be an inflection point that projects for us in February. You can see when you look down below, it's together, and maybe that would be an inflection point that we can look at. So this is just an enhanced analysis tool that you can use, and you can use these on the S&P 500. You can use these on individual stocks, but the key to the success with these is picking out three inflection points in price, 3 swing highs and swing high, swing lows. Okay. Anyway, let's get on to the roadmap here. Here is our roadmap as it stands as of the close on Friday. We are up here at our all-time high, 33.2988 versus the 33.30 target that I gave you guys. If we are to rise a little higher, we're going to be going after 33.59 as our next target. That's all listed out separately from this video. I won't get into that. But if we are going to correct back down, obviously we'll be looking for a move back to our 10-day simple moving average and our median line of this fork. The 10-day simple moving average is moving up very quickly. It's going to be all the way up here where I put the piece of text. It's going to be all the way up here, maybe even a little higher when we open on Tuesday. So it's going to be all the way into this gap that exists between Wednesday, when the phase 1 was signed, to the gap up Thursday open. There's a big gap in here. So if we are going to get into a little bit of a sell program on Tuesday, I would bet that first target is going to be, the midpoint of Thursday's range, and then Thursday's low and gap support. And if we break down below that, then the market wants to look for a back test of the 10-day simple moving average. Okay, so that would be initially where I think we would go down to. And if we get through this gap, fill this gap, and break the 10-day simple moving average, then obviously we are going after the 20-day. The 20-day has been a great marker for us as far as corrective moves go. When I bring back one of these fork charts here, if it lets me, and then this is where the video always gets like, you can see here is our one and only break of it since the fall when the phase 1 trade deal was introduced. We gapped up open right here on the 20-day simple moving average, and our one and only little correction of it was at early December when we came back from Thanksgiving. We came in and we had a couple of big down days, and then we had a really big gap down below the 20-day, and then we reversed and came back up. And you can see here in close-up how that also worked with this bull fork, because our high into Thanksgiving was a test of the median and a fail and a fall back down. And then finally, a couple more tests up against that median line until we finally broke out around mid-December and began closing and holding above it. And then here on the 31st of December was a complete, move down below the median line. And then as we came into the first trading day of January 2020, you can see how we gapped up open. Our low tested that median line and held it. And then, of course, some chopping back and forth. And now here we are up above the median line. So I hope that all makes sense. So our median line, our 10-day simple moving averages, our gaps, opens, closes, and then eventually our 20-day simple moving average will be our targets on the downside. And if we need a deeper correction than that, maybe the market wants to fully backtest the December low. If that were the case, then we would be coming all the way down here towards the bottom of the fork in order to do that. Okay? So I hope this helps you out and gives you something more than just, the average same old to look at and analyze where things are going. And you can, like I said, take these forks over to your Apple chart, your Tesla chart, whatever it is that you want to trade, Bitcoin, anything, and you can try it there. But the secret to the success of these is picking out 3 major inflection points to plot those off of. Anyway, enjoy the rest of your holiday off, and we will see you on Tuesday, the 21st.